Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instincts. Wednesday, April 29, 2026. On the surface, the S&P 500 barely moved. Flat close. Not much to see, right? Not really. Underneath, this was a rotation day. Money moved hard into semiconductors, into energy, into payments, while pieces of mega-cap tech sagged. The tone felt mixed. Risk was still on the table, just targeted, only where the tape had a clear catalyst. On the S&P 500 Heatmap, it looked like a split screen about half red, half green, but definitely not evenly spread out. The big mega-cap tech boxes were red and heavy, visually pulling the map down. At the same time, the broader semiconductor complex lit up bright green. Then you had these vivid little islands in payments and in energy, keeping the overall index from looking even worse than it actually felt. That heat map split? It lined up almost perfectly with where the money actually flowed. Leaders were semiconductors, especially the catch-up trade outside NVIDIA, plus payments on strong earnings prints, and energy riding the oil move. On the other side, industrials stayed soft, and rate-sensitive defensives like utilities and real estate bled. The key tell, chips were strong, but leadership inside chips rotated. The troops ran, while the general lagged. The backdrop tension was pretty clear. Rising oil and firmer yields kept pressure on duration-style leadership, especially the biggest tech names. But earnings winners were forcing violent stock-by-stock repricing, so the market didn't really decide anything today. It just re-ranked leadership in real time and pushed the big decision to the next catalyst, especially how traders digest mega-cap earnings. On the chatter side, nothing in the tape notes really qualified as a verified rumor list today. But the speculative narrative traders leaned on was this idea of a leadership handoff inside semiconductors, broad chips catching up while NVIDIA lagged, which some read as positioning getting quietly redistributed, and on the macro side, the oil move carried that geopolitical supply risk framing in the headlines. Important to note. But the market's interpretation can flip fast, and this is one of those storylines that's almost entirely headline-driven. Intel was one of the loudest tells on the board. INTC jumped about 12%. The move looked like continuation strength after a major earnings and guidance reset, with the market repricing the turnaround story. And when a legacy bellwether rips like that, it tends to pull sidelined money into the broader semiconductor complex, fast. Now the flip side, NVIDIA fell just under 2% on a day when semis broadly ripped. That divergence was the story. The analysis flagged it as a positioning and valuation pressure tell, with yields and oil both firm, and when the AI general can't really participate while the troops are rallying, traders start hedging the complex differently, because leadership might be rotating, at least for now. In payments, Visa delivered the clean earnings leadership print. V surged about 8%. The move tied directly to the earnings reaction and an aggressive capital return story highlighted in the coverage. And because Visa acts as a spending and credit services macro proxy, when it gaps like this, it can quickly flip the tone of the consumer debate, even if the broader index is stuck. Energy was not background noise today. Exxon Mobil gained almost 3%, as crude surged on that geopolitical supply risk narrative. And here's the key from the tape. Energy strength feeds into inflation expectations and into rates, which then shows up as pressure on tech multiples and on small caps. So XOM wasn't just a sector winner, it was part of the session's macro mechanism. On the megacap side, Microsoft was part of the drag. MSFT slipped just over 1%. The move fit the theme of megacap weakness into a catalyst-heavy stretch, with the tape hypersensitive to yields and to valuation debates. And because Microsoft is a core index pillar, red MSFT can cap index upside even when other pockets, like chips and payments, are ripping. SBUX was another big single-stock reprice. SBUX jumped about 8%. The move lined up with a beat-and-raise setup, better North America transaction trends, and higher guidance in the sell-side chatter. What made it stand out? It ripped on a day when higher yields and higher oil were supposed to be a headwind for the consumer story. Looking ahead, the near-term setup is all about digestion and confirmation. First, you've got post-close digestion from that April 29th after-hours megacap earnings cluster. Microsoft, Amazon, Google, and Meta are the big tells for index direction. Second, watch whether today's semiconductor split actually sticks. Does NVIDIA catch up, or does broad chips leadership hold without it? And next week is stacked ISM services, PMI, and JOLTS on Tuesday. ADP on Wednesday, jobless claims Thursday, and the April jobs report on Friday. No forecasts here, just a reminder that catalysts are lined up back to back, and today's selective positioning can get tested fast. So the close is simple. The indexes looked quiet, but the market was anything but. Leadership got repriced in real time. Chips, payments, and energy up front, while rate-sensitive and industrial pockets were left behind. Heading into the next session, the question is whether today's winners can actually hold their gains, and whether mega-cap tech reasserts leadership or stays the source of funds. Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.